What's up everyone, and welcome to another Bitcoin market update. In these videos you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others, and also see where we are looking to buy and sell these crypto assets ourselves. So let's get into it here with Bitcoin on the weekly time frame. So on the weekly time frame here, we have had this drawdown here. We've came up, we formed our lower high right here, and now we are coming down to form a lower low. We dipped below this low here from May 17th and this low here from January 18th, and now we are closing up above that. It's likely in 3 hours that we will close above those key lows, and then it's just going to be a matter of if we are going to be coming up to potentially form a either higher high or lower high, and then a potentially come down to form a lower low, or come up, form a higher low, and then a higher high, change a trend. So right now it's kind of chopped in this area with a low high low low, and then we'll probably end up coming up and forming another high, either a higher high or a lower high. So we'll see what we get. But it is increasing the likelihood that we're going to form a lower high when we close below the R1 pivot here, because it'll be two candle closes below it, so this will turn into resistance again for us, and this is up at about 37,600. This light blue level is our support zone. We've already tested it once here, bounced above it, and now here's a second test potentially here if we bounce above it again right here. So we'll see what we end up getting here, but this is something that I'm watching. If we look at the RSI, we're most likely not going to form a well, I guess we'll see where this ends up at the end of the day here, but right now we're at a 43.04 RSI, and the previous low is at 44.19. So for us to form a bullish divergence, we would need this RSI to close above 44.19. So we'll see how the weekly candle closes in about 3 hours. We are seeing increasing bear volume though on this drawdown, so it's not good for us to come up and then form a lower high and then break down again. I do think that if we do come up again and form a lower high, this is going to be an opportunity to go short, and then we'll potentially see a drawdown through this zone in the coming weeks and months. But the bull case, if we look at this from the bull's perspective, the bull case is we're looking at declining bear volume here on the monthly time frame in 3 days and 4 hours. If we close in 3 days and 4 hours with below the previous volume from last month. Last month we had 133.23 billion. This month we have 91.14 right now. So it's unlikely that we're going to go above this and have increasing bear volume on this drawdown, but we'll see what we get. But it doesn't mean this one indication of declining bear volume does not necessarily mean that our low has been set. For our low to have been set, we're going to have to see trend changes on the lower time frames. So right now, the weekly, this is good news for the bulls in terms of people buying the dip on this drawdown. When you break to a lower low on the weekly time frame, typically you get some follow through. But right now we're not getting a lot of follow through from the bears. We drew down, and then immediately the bulls recovered and bought the dip. So good news for the bulls is this could end up being a liquidity grab below this low here, as well as it always does this. What in the heck is happening? This low here. So it could be a liquidity grab below this low and this low right here, and then we could see a pretty significant rise in price thereafter. We'll see what ends up happening. Let's look at the 2-day time frame and look at the potential trade that I'm looking to make here. So this is a really simple setup here. If we look at this is something we've talked about on past videos. We have this candlestick right here, which I will show in a second, these levels here. But really we had this bull trend right here, and then we broke down through this zone. We came up, and then we formed a lower high, and we came down, and now we're potentially forming a higher low. So if we come up into this zone, this is the major resistance zone for price if we see an increase in price. And the reason is because this should have been a support zone once we closed 2 candlesticks above this key high, because we resisted right here, we had resistance right here, and then when we closed above it, we should have a support when we retest this kind of zone right here. But we pushed right through it and closed below it. So now we didn't test it here either. You see we got close, but we didn't actually touch it. So now what we could end up seeing is a potential move into this gray zone in the coming week, which is the opportunity to go short, and then subsequently a massive drawdown down to potentially this dark blue zone, which is down here at about 24,350. So the profit potential for this trade is very good if we use our short position tool, and let's say we get an entry on both of those pink lines, it'll average out to be right around this level, and then let's say our stop loss is somewhere like, I don't know, right about 39K, let's call it. Then our profit potential, if we go down to that zone, is about 33%. So I know it seems outlandish now for us to go down to that level, but it could end up happening. And the reason for that is if we look at different things like the pivots indicator, the weekly pivot falls right inside of this zone as well, inside of this gray zone we talked about. That's the R1 pivot. In addition to that, if we look at the VPVR and we expand this out to show the price action from over here, you can see the high volume node is right inside of that gray zone, right above this key high right here. The other confluent thing with this is if we look at the Ichimoku cloud, the outer edge of the cloud right here, if we look at this, it's kind of hard to see with these here. If we look at this level right here, the cloud edge is right here at about 37,500. So there's another confluent factor there. And then if we look at the super guppy, this is about to flip over to be potentially the most bearish scenario on the 2-day time frame. As you can see, we had a very extended period of bulls right here, and then right here is where we had our bear run. Now, if we look at this from a bearish perspective, let's just look at this little zone right here. So if we look at this from a bearish perspective, once we had these EMAs expanded out, what happened was on the first test right here, we reject, second test we reject, third test we reject, and then fourth test we push through it. So this scenario right here is actually the unlikely scenario. Typically, when you first test the red zone, you don't break through it. But that's what we got right here. We retest. I mean, we went right through it on the first test. So it's possible that we could end up doing that here, but it's more unlikely due to the fact that the EMAs have not actually expanded out yet to be red. So they're getting to the point where they might become red. So this could potentially be the entry where you get an entry here, and then when it breaks down, these EMAs expand on the downwards move in price. If we go to the daily time frame, we can see that this daily resistance zone that we talked about in the past video right here, this black candle, gave us an entry point right on the wick. You can see that level, if we were to look at this horizontally, acted as resistance right here, and then we had a breakdown right here. So the measurement from the entry to the bottom here is about 13%. So that was a very nice trade there, off of a fresh resistance, and now we're coming up here. Now, if we look at this from a daily perspective, looking at things like the Ichimoku cloud, most bearish scenario right here for the Ichimoku cloud, super guppy, expanded EMAs that fall right within that 2-day gray zone, more confluence for that area. And then if we look at this from a 3-day perspective, here is some hopium for the bulls. We have declining bear volume. We have potential for a bullish divergence here on the RSI with a lower low in price but a higher low in the RSI. And then we have a potential liquidity grab here below this kilo, and this kilo back here. And that was on this wick right here. We've had an inside bar meaning that once we get the expansion up or down, it'll be, or once you get a break of the high or low of this candle, up or down, you'll usually get expansion. But even if we did get expansion above with those factors, it's debatable on what we're going to end up seeing in terms of the RSI playing out, because if we look at this scenario that we had right here between this low and this low here, we had a hidden bullish divergence with a lower low in the RSI and a higher low in price. And as soon as we broke the high of this candle, and we had an inside bar, and as soon as we broke the high of this candle right here, this is the follow through, this wick. So the follow through was literally from this high up to here was 3.29%. So it was very minimal, and then we had another drawdown. So we could see something happen here again where the RSI is telling us again, potential bullishness. And then, once we get the actual move up, it might be pretty abbreviated, and we could end up seeing then a further drawdown. Now, because of the magnitude of the bounce into this zone, it would be something like, if we got into the 37,345 entry, that's about a 30% rise off of this drawdown. It's likely that that'll form a lower high, and then we'll come down. Now, when we come down, it doesn't necessarily mean that when we come down, so if we come up into it and we come down, it doesn't necessarily mean that we're going to break to a lower low immediately. What we could end up seeing is we come down and we form a higher low, and then we come up and form a higher high, or we break down for a lower low. But so there's still some hope for the bulls, even if this level that I'm talking about holds as resistance. If we're a bear, this is the main level that I'm looking at. 4-hour time frame. Right now we are rejecting off of the resistance zone that has been our main zone to watch from back here from June 9th for 1, 2, 3, 4, 5, 6, 7. I mean, this thing is just support resistance flip zone to the max. I mean, it doesn't get beautiful than this in terms of a zone holding up. And so if the bulls can get a push above the zone and close 2 candles above it, it should act as support again. And then we'll potentially see where we're at. If we pull up trend following indicators, bulls are trying to build their way up into this trend indicator, the Ichimoku cloud, being back bullish again. But right now you can see still not looking promising there. Last thing, super guppy. Still in bearish scenario here, so that's what's suppressing price. We go into the EMAs, rejection, into the EMAs, rejection. So the more times we do that, we eventually have to get to this scenario here where we break above it like this, the expand, we get a little bit of support off them here, and then we broke through them. So we're gonna have to get them to flip back to the bulls' favor over the next week or so. So that's what I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And until tomorrow, onward and upward.